YouTube, what it do? Lil Petty back with another options episode. Alright, in this options episode, we're going to be showing you guys 500% plays, 1000% plays, options, day trading. You guys know what to do. Without further ado, let's get into this video. We're going to be talking about what's going on in the options world, how we can take advantage of mispriced options, and yeah, so let's get into this episode. Now, if you guys don't already know my website, I'm posting my after hour watch list, links in the description every single day after the market. So if you wake up in the morning and you want to come and check out what I'm looking at, I'm posting what's going on in the markets. Now, as you guys can see, this is my after hour notes. We have my hot stocks: Boeing, Tesla, Apple, Microsoft, UVXY. 10% continuation plays. These ones hit the scanners. Now with the 10% continuation plays, they either usually be a 10% continuation play, or they usually play as gap fades. They're usually going to run up, or they're going to just either fall back down, or they usually just consolidate. So this is how I set up what I'm looking for. So we're going to get into the charts. We're going to look at the gap fades real quick, and we're going to go over the 500% plays. So stay tuned. Now, the first one we're going to look at, we're going to scan through these very quick. We're not going to waste nobody's time. So we got, dang it. Okay, boom. Alright, so we got STZ. We're going to see how these stocks played out. STZ real quick. STZ, as you can see, why was the 10% continuation play? Yesterday it ran up, and then we saw the consolidation, and then it ended up getting a run towards the end of the day. So that's considered a pass, but I'm not the type of person, I like to play breakouts. So this one was basically a fail in my book, but at the end of the day, it did play out. So we're going to look at BBY, and that can actually still qualify for another 10% continuation play or a gap fade. Now BBY, same thing. It had actually a small breakout. It ran up to the resistance, then it sold off. So that was actually a pass. BBY, we're going to look at Disney. Disney fell, it basically had a gap fade in the morning. So that was a gap fade. Macy's, gap fade. This is a clear gap fade. So this is what I'm looking at right here. It had a run up. So it's setting up for a 10% continuation play. It didn't play out. It had a gap fade, and it faded the whole day. So that is a gap fade right there. And we're also going to look at Lulu, because these are the stocks that I were looking at yesterday for Friday, and Lulu was a gap fade. Small fake out in the morning, pull back, same thing, gap fade. Gap fade. No 10% continuation plays. Now on the hot stock list, we had Boeing, and Boeing set up perfectly today for a sell-off, for basically a gap fade. Now, the stock opened up. You got the 1226 on the 5 bearish. So you could have rode this all the way down, really the whole day. But if you wanted to take your profits, could have came to the 1 minute chart. Okay, cool. Never crossed. Probably took profits right around here. Popped up right here. That would have been a good time to take your profits if you would have played the breakout to the downside. Now, I'm also going to show you Tesla, because Tesla had a great day. And we're going to go over these options and show you what happened. Now, I was going to trade Tesla today, but it had a gap. It basically had a gap fade, but it recovered to the upside. So it was a buy the dip scenario. And as you can see, it hit the support right around the lows of yesterday, and it ran up. And those are the hot stocks. We can go over Apple real quick. Apple had a nice day. Apple was actually, it kind of was flat. It had a gap up. So if you swung traded, then you did good. You had the gap up. And Microsoft was a little choppy today. Microsoft has been choppy. UVXY, the stock market did not go up, did not go down. So UVXY was more than likely not in play today. Maybe short the VIX. So now we're going to get into the 500% options plays. And this is what we got right here. So this is the options chain, this is the options chart, and this is the equity, because we are trading stocks. So the first play I want to talk about is JD. Now, JD, we have taken our eyes off JD, but JD and the Chinese stocks have been going up today. And I'm going to actually talk about a trade that I took today that was in the Chinese stocks. So, but with this stock right here, JD, let's talk about it. So, boom, JD, in the morning, it had a little consolidation, and then it went up to the breakout side. So, how could we have looked at and made a trade on this stock? So if you come to the 5 minute, I like to come to the 5 minute to get some more clear support resistance. So you have support, you have resistance right here that's been playing as resistance, and then you have support down here. You have support about right here. Now when the stock yesterday, it had a jump, and then it pulled back, and then it was setting up for basically a gap go. So now when you see on the 5 minute, you got the bullish cross in the morning, in the pre-market hours, and it held up basically throughout the day. So that's my indication that I like to go long. Now, when we look at the options, we're going to have to find this. Now, the 500% play was on the daily. So that means the contract expires today. It has 1 day till expiration. It has to be in the money. So the strategy is to find an option, either play in the money or go a little bit out of the money and find an option that's going to get into the money and then gain the intrinsic as the day goes up. So we're going to show you JD opened up around $30.30. So the contracts that were in play were the 30, 50s, and the 31s. The 31s were going to be a little more risky because you have support up here. You have overhead resistance, and you're trying to break out. So the next clear resistance, the heavy resistance, is going to be up here. And as you can see, the stock had a reaction towards this area, which was going to be 31.50. Now, we're not going to play the 31.50s. As you can see, the 31.50s, they did go from they went from 1 cent up to 16 cents from the low of the day to the high. Now, like I said, you want to get in the money and you want to gain intrinsic. So you're going to be looking around this area on the stock on the board. So when the stock opened up today, the stock was like this. So when it started peeking up like this, like, okay, before it had the breakout. Where's JD at? Let's zoom out over here. Okay, so this was Friday. So when the stock was like around here, you had this support, right? You had this resistance right here at 30.50, and then the next level would have been like this 30.31. So we're gonna look at the 30.50s to play it close. So we're gonna zoom out. We're gonna pin this to the top. So we got the 30.50s. Now the 30.50s, these ones were trading when at the open. They opened up today around 25 cents, and they came down because, as you can see, JD stock chart was a little consolidation. Now, you could have bought on the breakout, which would have been right around here, around 6.55. So you would have spent 20 cents for 20 cents. You could have bought 10 of them, 5 of them, whatever range you're trying to do. But like in this channel, we like to trade small size. So we're going to spend maybe $100 to $200. So that would have been 5 contracts or 10 contracts. So you would have got filled around here for 20 cents, and then you could have wrote it up. Now, let's look at the percentages, because JD stock was going up, and then it came down and tested this 12 EMA, and it rode up. Now, if you look on the 1 minute chart, you could have got out right here, and then you could have just took your profit and been done for the day. And this trade right here would have been a 267% trade. You would have sold around 70 cents, from 20 cents to 70 cents. At the low right here, it was still 153% trade. So if you would have got out on this low from here to here, that was still 150% trade. Now, if you stay on the 5 minute trade to try to maximize profits and continue with the trend, then you could have maximized your profits, and you could have actually got out right around here, which was at 11 o'clock. So if you wanted to do the $20 to the dollar, which was actually a hit at the top, which was a 400% trade. So you could have took the 400% trade, but basically you had all this room to make profits, to run the trade up and take profits. Now, if you don't want to be as risky, because playing the dailies are very risky, if we're going to show you the put side. Now, say you thought JD stock was going to come down, because it could have came down to this 29 area. So say you would have bought some 30 puts. We're going to look at the 30 puts. So the 30 puts opened up today at 8 cents. That's actually a good deal, because if these ones would have came down to 30 and farther, then this would have been this would have went in the opposite way. So these ones would have went up. So but as you see, these ones went from 8 cents and they just sold off because the stock went up. So these contracts went to zero. So if you would have bought 10 of these for $80 or 20 or 30, whatever, you would have lost 100% of your money. And that is why trading options on dailies are risky. Now, if you go to the next week out, let's look at the 30 puts. If you were on the wrong side of the trade, so you would have opened up at 40, and then you could have took a 10-cent loss, sold right here. Oh, the trend's not going my way, I got to get out. Now I still have money, but if you go to the dailies, and as you can see, those things were probably already trading at 2 cents. At set from 6:30 to 7 o'clock, you went from $80 to $20. So you lost 85% of your money. So that is why trading the dailies are risky, and you can just come out to the next week and you could have saved yourself, 40%. You still lost 40%, 30%, or about 20%, because if you would have got out at 7, you would have lost 16%. So that is showing you guys the difference of playing the dailies and the weeklies. So now, if you wanted to be safe, and we could have came over here on the same scenario, you could have even played out a little bit farther. So you could have played these 3150s, because these 3150s were a little bit cheaper. These ones were 20 cents. If you wanted to keep the risk down, you could have came out a little bit farther and played the 3150s. But like I said, if you would have came over here and played the 3150s, you would have only went from 1 cent to 16 cents all the way at the high. And then these 1 cents only went up to 5 cents from 1 o'clock to 9:30. So all the way to 9:30, these things barely jumped up. So you have to play closer and reasonable, but you can still go out a little bit farther. If we would have played in the money, let's look at the 30. The stock opened up at 30. So the 30s. These ones were trading at 50 cents. 30 cents, 60 cents, up to $1. So that's being safer by playing the dailies that expired today. But if you would have been on the put side, you can still see the 30 puts, because the stock opened up. Ooh, 30.50, my bad. 30.50s. So you were in the money. So these ones are 26 cents, 19. So you still had time to get out, 11 cents. So you would have lost 50 cents. So that's playing closer, keeping the risk tighter. But if you're going to go for, like I said, if you're going to be aggressive and you see the trend, then you can kind of, you got to balance out how you're going to work out these trades. Now, that was about a good few minutes on JD. Let's talk about Tesla. We want to show you Tesla. The options on Tesla. Now, Tesla today, these options on the dailies, these ones did really good. The 2070s. Now, these ones went 700%. So, yeah, these went for 86 all the way up to $6. So that was 600%. Now we're gonna dive in and see what was going on. And these ones set up so perfectly because, as you can see, the price of the option opened up at $3. The Tesla, I'm gonna go to the 5-minute chart real quick, because Tesla had a gap down. So these Tesla last night was trading. These are trading at $2,600. Or no, that was the day before. So the day before Tesla gapped down, these went down to $1, $3, whatever. And then they came down because Tesla kept it. These are the 270s, and Tesla was trading at 260, so they never got back up to the range that it was supposed to get to, which was up in this range when the contracts are trading up here. So when the contracts opened up today, they basically opened up at the same price because they closed at the same price. Now, when they came down, because these contracts expired today, we're going to zoom in so you guys can get a clear, see what I'm talking about. You had the bearish cross, so the puts, the calls were going down. If you look at the put side, the puts gapped up, and they were going up in the first 5 minutes. See right there. They opened up right here. They came down and they went up to about $4. And then they started slowly selling off through the day because Tesla, these contracts got out of the money. So that's another reason you need to be quick to take your profits if you're going to be coming over here and playing $3 contracts that are dailies. That's another lesson within itself. Now, let's get back to the put side, the play. Now, when Tesla came down and it bottomed out and it started curling up, as you can see, you got the cross on the 1 minute. On the 5 minute, you got the cross right here at 720. So at 720, these contracts are trading around $1.80. On the 1 minute chart, these contracts are trading at 703. So at 703, they were trading at $1. The low of the day was 66 cents. If you were trying to buy the panic buy, but we're not trying to time the bottom. We're looking for our indications and our trades plan to set up properly. So when we got the cross, you could have went long and then bought these at this range right here, and then you could have sold them up here. So that trade right there was a 300% play. If you wanted to ride out the continuation, so we go to the 5 minute and we see if the trend is still our friend and it's holding up. And as you can see, we did not get the cross all the way up until 12 o'clock. So at 12 o'clock, you could have sold up around here for $5. Now I'm quicker to take my profits. I'm not trying to ride it out the whole day, but you could have bought two and then let the other one run. So that's basically the 500% Tesla play. And we're gonna go over one more play. Oh, I'm gonna show you guys the trade that I took today. Today was actually a red day. I'm going to show you guys real quick. I had one green trade. I had one green trade on WB. I took a loss on Tesla, SPY, Nvidia, Microsoft, Boeing. And I was down. I'm down $100, but I made $100. So I lost $200 on 5 trades and made $100 on one trade. So that's showing you guys how to keep your losses small and have bigger wins so you can still be profitable at the end of the day. But I just wanted to show you guys that really quick. I'm going to show you guys the trade that I took. Now, let's get back to the trade. And the reason I ended up going short, I tried to take a short trade on Tesla because I missed the breakout. And I was trying to, I thought we were going to get the cross back down to the downside. So I ended up, I think I took the trade up here and I got stopped out. So, but I'm going to show you guys the trade that I took on WB. Now, WB had the breakout. I ended up getting in around this area and I ended up selling around this area. So it was a quick trade and I did not play the dailies. I'm going to show you guys the dailies because the dailies ended up going crazy. So, show you guys how we look to find the dailies. Now this was a 10% continuation. This wasn't a 10% continuation. It was a few days ago, but we've just been keeping this on the watch list. So this stock gapped up. It was a gap and go. So it gapped up a little bit and then it had the continuation to the upside and it ran up the whole day. Had the cross, 5 minute, held up pretty good for the most of the day. Top of the day was at 72. So when you come out and look, where can we find range to get up to? So it hit 70, but we want to zoom out and see, is there any support hanging out? And you have to actually come out farther. So yeah, so we would have been looking around the 70s. I ended up playing the 70.5 calls. So we're going to look at the 70.5 6-day out weeklies. So I ended up grabbing these around, like I said, I ended up grabbing them around here, this 730 area. It's kind of hard to see on this chart because this is okay. Cool. So we ended up getting in around here, and we ended up selling, I think, around here. So this was the option. Like I said, you guys can see right here the trade. But yeah, this was basically a breakout trade. I didn't get all of the bag, but I got a little bit of the pie, and that's all we're really trying to do when when you're not really all the way on your game. So yeah, that is gonna probably do it. This is a 20-minute episode. I went over the 500% option plays, the JD. I'm going to be making another video. I'm going to make my Saturday options talk. We're going to go over the options I'm looking at for the week. The week coming up, we showed you guys the options chart, my website. We talked about the gap fades. I had a red day, small losses, little petty. I'm out of here. You guys have a good one.